Hey pack leaders, so this video is information on how to get your life insurance policy. Now there's two things you need to look for. One is participating, second one is whole life. Participating is very important because you become part owner of the insurance company. So your policy entitles you to the dividends that the insurance company makes. So as you're paying yourself interest, as you take a loan out, the interest you're paying back into the company, you're actually earning a piece of that pool at the end of the year or month or whatever it is that they distribute back to you. Okay, so as long as those two components there, then it's a good life insurance policy. Now, there's a lot of resources and brokers that you can go through. They're kind of like all real estate agents, and the only thing that separates them is your relationship with them or their relationship with you and who you trust. So for me, I use Paradigm Life. From what I researched, I talked to Spencer, and he's my guy. Now, Spencer didn't really explain it too much. Like, he tried. He's very helpful. He'll spend as much time with you as possible. But who knows if this video is still around many years down the line to my children's children. We're probably all gone by now, and you'll probably have to find someone else, either through that organization or maybe through the YouTube videos that you find. Some of these that I have put down in this YouTube channel, and also this membership site that you'll be able to kind of see. So I'll put that in the description, and then you can kind of connect to those people. But make sure those two things are there. Okay. Now, when you're getting this participating whole life insurance, they usually pay about 4.5% for the insurance, and then the dividends can vary between 4.5 to whatever it is, that depending on how well it grows. So that's the not guaranteed participating dividend. So there's a lot of explanation of how what's guaranteed and whatnot, but they want basically at the end of the day is to maximize your cash value and minimize your premiums as much as possible, so that you pay the lowest premium or get the most cash value, because we're using it as a bank, not for life insurance. Okay, now if you really want it for life insurance, I also have a separate term insurance that you can get in addition to that, which is like $25 a month, and then it'll insure $500,000 to $1 million depending what you want, but it's really cheap. So I would get both of those until that one the whole life catches up. Then you could kind of kick off the term one. Okay, so that's what I would do. And thanks for watching this video, and get that going as soon as possible, because it takes time to grow. The first year it takes a while, because when the first year I was like, I just put like $5 grand, $4 grand in it, and like, and the dividends is like, or the cash value is like very small. I was like, where'd it go? So make sure you have the paid up additions that go with it. But then once you get past all that stuff, a lot of that goes towards the policy to build up the equity. Okay, so you'll see very minimal cash value based on the premium, but then the paid up addition lets you put more cash value into it. But once you get about 5 years, then it basically self funds the policy. Basically, the interest that you made off the dividends can pay for the policy premium itself. Then you can then start a new policy and then use those as containers as a bank to withdraw money from as you need it, and then just stuff it back in when you're done with the money, or all your income can go into it. And they talk about it in I think the Life Benefits channel about using a money manager's account and not stealing from your own bank. Okay, so make sure you pay it back and don't steal from yourself. So here's some books and resources, and go from there. All right, thank you. Talk to you then.